Good morning. Ni hao ma. Hola. Konnichiwa. Ohio. Good morning. How are you? Jumbo. Guten Morgen. Good evening from Indonesia. Man, I'd really like to visit Indonesia. And someone emailed me from the Philippines last night, and I'm like, yeah, that's another place I'd like to check out, have some fun. So good morning. Croatia. I've heard Croatia is incredibly beautiful. Morning, Daniel from South Africa. Very cool. Pachow, says Goose. Scotland. Yeah. I have to visit Scotland. I know where my great-great-great-grandfather built a house. In fact, anyways, long story. So I'm obviously a wee bit Scottish. Oklahoma. That always reminds me of the scene from Dirty Rotten Scoundrels, if you have ever seen it. Oklahoma, 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 Oklahoma. Lady Fanny? He called me Lady Fanny? If you know the movie, it's funny. If you don't know, you're like, this guy is nutso. London. Zimbabwe, huh? No kidding. Texas. That's a mighty big statement. I live in Texas. Yeah, that's a big state. All right, so good morning. Comment allez-vous? How are you? Lowell knows the movie. Oh, Lowell's in misery. Buck 30. Degree 360s out. Egypt. Yeah, I'd love to visit Egypt. Hollywood, Florida. What's not to love, huh? Ohio. He lives in Ohio. I think 1/3 of America lives in Ohio, huh? Very cool. Well, we'll have to go to a ball game. Go to the land of Cleves or something. Yeah, Dirty Rotten Scoundrels. That's actually one of my favorite movies. So anyways, hey, good morning, everybody. I love you. I'd like to take an opportunity to thank you for the effort that you put into this thing we call learning Forex. None of us here today are the best at being a Forex trader, but that's such a silly ambition. Why would you even have the aspiration of doing the best? But we're doing our best, and that's the part of that I appreciate. So I know you're doing your best. You're throwing everything at this. This is a tough gig. I'm really no different than you. I'm just 10 or 20 years ahead of you. But when I started, it was ridiculously, crazily difficult. And if I was smart, I would have given up. If I was intelligent, I would have given up. If I was logical, I would have given up. It's too hard. It asks for too much. But the thing is, I'm not sane. I'm not intelligent. I'm not smart. I'm an entrepreneur. If I knew better, I wouldn't be here. I'd have a regular job. I would check in. I'd punch the clock. I'd pick up $1.20 a year or $2.20 a year, whatever people make, and then I'd go. I'd hide behind my cube. I've had those jobs where there's people hiding in their cubes and they literally pretend to do work. And I want to change the world and make it a better place. Okay? Somebody really poo-pooed in the comments on Harvard the other day. And I'm like, look, I don't think you've ever been there, because the people that I know there are really interesting, hardworking people that actually have aspirations of contributing to society. So, I don't know. So, anyways, here we are. We're all trying to do our best and change the world. And you have to start by changing your own world, making your mind a better place, making your space a better place, giving more to the loved ones around you, and then keep reaching out. And pretty soon in your community, and then pretty soon in your country, and then someday in your world where you're high-fiving people from Indonesia and Zimbabwe in the same morning. So I just want to say you're not alone. We're in this together, and I appreciate all the efforts that you put in and the kindness that you give me every day. Thank you. See, this is what happens when I get sleep. This is what happens when I get sleep. So anyways, I think about you and I appreciate you. Okay. Let me, on a different note, let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. So, let me remind you that also you have, I think, the greatest opportunity in the world in front of you. My past has put me in a situation where my job was to review opportunities for investment. That was my job. Analyze markets that potentially could be hundreds of millions, maybe even billions of dollars one day. There is nothing even half as good, quarterly as good, 1/16 of the opportunity that you have in front of you. It's so good that when I saw Forex, I knew nothing about it. I've never traded a stock before. I'd never looked at a chart. I knew nothing about technical analysis. I knew nothing about fundamental analysis. I was just your average venture capitalist. It sounds funny. So I saw what was it, $2 trillion a day? And here's what I essentially did, at least emotionally. I dropped the mic on the boss's desk. I quit. I'm out. I got to find this. I got to figure out this $2 trillion a day thing. Okay? And here's our business, guys. We're in the business of buying and selling money. And one day you might be in the business of buying and selling other people's money or on their behalf, right? What an amazing opportunity. And there's leverage, and you're mark to market, and you collect interest, and all these different things. What a great opportunity. So I hope you achieve every dream you have. Now, if you're benefiting from these webinars every single morning, please thank Traders Way for being the sponsor. Here's how you show your gratitude to them. Visit tradersway.com, open up a demo account. That just displays that you're here, and then give them an opportunity to earn your loyalty and respect. Play some trades, check out the speed, check out the spreads, check out the swaps, and you'll be very happy. tradersway.com. Yeah, did great, pretty good. Was that from yesterday's trades? Thank you, Julie. Well, wait, you were up super late last night, and you're here super early. That's cool. Jamie says, hey, how's the programmer doing? Awesome. So, I have to meet with them today. But here's what I did. Here's how it's going to work. I actually tested it, and I think the programmer forgot a couple of files, or maybe he told the software to put them in the wrong place. So I have to figure this out. But 90% of it worked. So here's what'll happen, Jamie. You'll be at metatraders.com, and you will say, I'm an MT4 trader. You'll click a button. Software will download in about 20 seconds. And it'll say, hey, I'm going to install all this stuff. And you're like, awesome, right? And then you click next, and you have to tell it where to install. This is the new part we had to do. So here's how it'll work to install the templates, right? It'll say, where do you want to install? So you might have 5 different MT4s on your computer. This was the issue, okay? Right? Where does it go? So you'll have to say, okay, well, first you go to File, Open Data Folder, and we know this is where you install templates and indicators and expert advisors and stuff, right? All you have to do now is copy this address. That's it. You'll paste that into the software and it'll say, awesome, that's where I'll install all the files. You'll hit next and it'll install like 215 files or something. And it'll go, it takes about 15 seconds to install all those files. And it's done. It'll say finished. And all of a sudden, you'll have these profiles. Oh, I have to do this. You'll have all these profiles. You'll have all these templates. Okay? And stuff like that. So, he has to update that. And now that we know it works, then he has to do the MT5 version. Then it's done. So maybe Saturday? Maybe Sunday? It'll be yours. Yeah, boy! So, money and time invested into your happiness. Thank you for your patience. Okay. What is the Fed's balance sheet? Ashish. When money supply in the United States of America changes, that means the Fed has either bought bonds or sold bonds. So if you own bonds, the bonds sit on your balance sheet. Okay? It's your classic, do I have my drawing tool? No, I guess I have to boot it. It's the classic situation of, so like, for example, in the fundamentals course, which you can get for 80% off right now. Ha ha ha. I haven't changed it yet. I haven't had time. So that the coupon still works in the link below. All right. In the training course, in the fundamentals course, in hour 4, maybe hour 5, I can't remember, I teach you how to manage the balance sheet of a commercial bank. Ha 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 ha. And in that lesson, the reason I teach you that is once you know how to manage the balance sheet at a commercial bank, now you have the foundation for us to discuss a central bank. And that's how the training course works. So you get to that point and you know liabilities and assets and required reserves and excess reserves and bank capital and all this kind of stuff. Okay? So let me test you guys quickly. You run a bank. Okay? You run a bank. This will be brief. It's just you answer the question. Okay? You manage a bank. A client walks in and deposits $1,000. Is that an asset or a liability? And if you know, don't answer. But everyone else, come on. They deposit $1,000 in the bank. Is that an asset or a liability? A liability used to create assets. So Jamie's thinking ahead. Well, let's think about it. They gave you cash. You have $1,000 in cash in your vault. See, the reason they call it a balance sheet, and this goes back to answering the question earlier, Ashish, the reason they call it a balance sheet is it has to balance. So it goes into the vault as cash. It's an asset. But it's a customer, a depositor, can demand that money at any time for any reason without notice. So it's also a liability. If they show up and you're like, you know what? 5 minutes later, if they show up, you know what? I want to take out my $1,000. Okay. You go to the vault, you take the $1,000 out, and you give it to them. Assets decline by 1,000, liabilities decline by 1,000, and the customer leaves. But if the customer comes back and deposits $1,000, you put $1,000 in the vault. That's an asset, but you also owe that customer on demand $1,000. Now, here's the interesting thing. If you offer them a certificate of deposit, is what they call it in the United States, and you say, okay, if you deposit the $1,000, but you tell me you are not going to use it for a year, even if you want it, I'm not going to give it to you. If you're cool with that, if you guarantee me as the bank manager now that you will leave this $1,000 in the bank for 12 months, then I will pay you a little extra interest. I'll pay you more interest. Instead of, let's say, 1%, I'll pay you 3%. Okay? But now, as a bank, I can take the $1,000 and loan it to your neighbor for their mortgage, or loan it to the restaurant down the street so that they can buy equipment for their kitchen. And now I'll charge them 5%, and I'll pay you 3%, and I'll collect 2% as a spread because I'm a financial intermediary. Okay? And yes, I do solve the asymmetric information problem. Thank you for bringing that up. All right, so cool. There's a little taste. Delicioso. Yeah, all right, cool. All right, let's see. Where are we going to go? Where we stop? Nobody knows. Thanks. Great question, Ashish. All right, Coolio. La 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 la. La 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 la. Okay. Let's see. Down, 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 down. Up, up. Sell. Down, 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 down. Up, up. Sell. Down, 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 down. Up, up. Sell. Down, 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 down. What do you think? Are we going to have some ups? Okay, so let's reverse into history in case you're not sure what's going on. This here tells us there's going to be profit taking. Okay, this here is bearish, and this here is a target. This here is a bearish entry. This here is the target, and then this here is an entry, and then the target's below if it continues. Okay. You don't know how far it's going to fall here, but this is the general target. You don't know how far it's going to fall here, but this is the general target. So if it comes up, you'll sell here at 123, but you're not quite sure what the target is. It should be below 121.50. It's not even on the chart here. I'd have to back out, but I just want to make the point that that's probably what you're thinking. If you're risk off. This is not pound dollar. This is risk off. That's all it is. Fitness says, hey, but if you come back in 3 to 6 months, the $1,000 might have dropped in price. Well, actually, it wouldn't be price, it would be value. I know there's a different, because $1,000 will always be $1,000. But one day it buys you, it's always relative to something, right? So an economist will say, well, maybe it'll buy you one watch now. Okay? But in a year, maybe it buys you 0.78% of a watch. Okay, but it's still $1,000. It's just the watch either went up in value, aka inflation, or your purchasing power has diminished. One or the other. Okay, it depends on how you describe it and that kind of stuff. But $1,000 will always be $1,000. But you're right. Okay. What does risk off mean? Okay, if you're feeling good about the world and you want to earn money, you know that reward is a function of risk. Okay? So if you take high risk, if someone said, I want to say it in a good way. Well, I just want to say it, risk is a function of reward. So, Or is it, the function of, but whatever. So you understand that if you're going to take a high risk bet, you're going to demand a higher reward for that risk. If you're going to take a little tiny risk, hardly any risk at all, you're going to assume a low reward for that, okay? So when you're risk on, it means you're willing to take and assume more risk. And you do that, we know actually behavioral finance shows that you'll do that actually when you're down. Okay, and that maybe that's the interesting thing. Maybe we can talk about that for a second. Behavioral finance will say when you have nothing to lose, you'll bet big. Okay? So when you're poor, you'll gamble everything to try to get rich. That's interesting, right? Now, we know logic will say when you don't have a lot, you should be conservative. And you should focus on the long term. And you should focus on compound interest. And you should focus on little, but growing slowly and steady. Right? We know the logic is you should be, focused on being conservative. Especially if you don't have any money. Because if someone said, look, you could turn your $1,000, let's say, into $100,000, but it'll take you 5 years. Okay? You say, oh, well, that's great. What do I need to do that? Oh, well, you should just focus on 3 or 5% a month over and over and over again. Okay? That's the logic. So I can prove to you with a spreadsheet the power of compound interest over time. Okay? And then you should say, oh, that's awesome. I will focus on that. I know if I can do 5% a month in 5 years, all my financial problems will go away. But we know also that that's not how human nature works, though, right? So anyways, logically, if you're a professional investor and you're assuming lots of risk, it's because you are very confident. You're very confident. You have money and you want to deploy that capital because you know things are good and you're trying to get high returns. Okay? That's risk on. And that's where you'll see money, like, let's say, flowing out of the United States and into business opportunities in the UK. That's risk on. When you're worried about the future and you think things are going to go from bad to worse, you're going to bring your money home, stuff it in your bank where it's nice and safe. You're not going to earn any money, but you're taking risk off the table. Okay? Yeah, degree. And the interesting thing is there's no R and there's no E, but it's interesting because banks will create the E and even though the Fed has removed the R. Typically, there's an R by the central bank and bank managers manage the E. In this case, it's the opposite, and it's really strange because it'll flip. So instead, now there's no R, but there's tons of E, and usually there's lots of R, no E. So yeah, the money multiplier equation is kind of, it's the same except the opposite. It's exactly the same, but it's opposite in the structure. It's pretty interesting. So we'll see how this all